Micron just dropped an absolute bombshell on Wall Street. Let's zero in on the core of this cash-printing machine. Total top-line revenue hit a blockbuster $23.9 billion, exploding 196% year-over-year. This massive cash flow splits across four engines. Cloud memory raked in $7.7 billion. Core data center accelerated to $5.7 billion. Mobile and client swallowed $7.7 billion, and automotive and amp. Embedded lockdown $2.7 billion. Look at how they squeeze this cash, retaining a colossal $17.8 billion in gross profit at a massive 74% margin. They ruthlessly suffocated operating expenses at just $1.4 billion, generating $16.4 billion in operating income and securing a clean $14 billion in pure net income. The fatal blow? EPS hit $12.20, utterly crushing all street estimates. You are witnessing the most brutal structural pivot in tech history. Flashback to the dark days of the 2023 memory down cycle, where revenues suffocated at $3.7 billion. But watch this violent acceleration. The legacy compute and mobile structures have been completely wiped out, evolving into four hyper-specialized pillars swelling into a juggernaut to deliver this historic revenue milestone. The AI supercycle has permanently reincarnated Micron from an aging cyclical player into an absolute behemoth, manipulating the world's memory grids. This explosion is unfathomable. From a mere $3.9 billion in early 2023, the total market scale has gone vertical, ripping through to a monumental $23.8 billion this quarter. DRAM alone devoured $18.8 billion of that pie. This insane trajectory is fueled by hyper-growth CAGRs, NAND shooting up 77.1%, and DRAM flooring the gas at an insane 91%. Now watch how this massive pie is carved up. On the DRAM battlefield, Micron plants its flag at 22.4% market share, tailing SK Hynix at 32.1% and directly threatening Samsung. Over on the NAND front, Samsung leads with 28%. SK Group holds 22.1%, while Micron's 12.8% executes a pincer movement alongside Kioxia and SanDisk. The game has changed. Memory is now the ultimate strategic asset. Hold your breath for the nuclear core shaping the next decade. Total memory TAM is projected to bloat to $330 billion by 2030, with HBM alone skyrocketing to $98 billion. Look at this terrifying market share coup. SK Hynix is in a free fall from its peak down to 57%. Meanwhile, from a mere 9% underdog status in late 2024, Micron has launched straight to the 22% mark in Q3 2025, officially closing the gap and tying Samsung's hands to reclaim absolute pricing power. This dominance is backed by an invincible ecosystem, kicking off with the HBM4 breakthrough. 48 GB, 16 high stacks delivering a 33% capacity boost, ready to hit volume shipments in Q1 2026 to perfectly align with NVIDIA's Vera Rubin architecture. Shifting to data center infrastructure, the new 256 GB LP Sock'em 2 module slashes power consumption by a third, teaming up with G9 NAND SSDs, delivering 16 times the throughput. On the consumer front, they're forcing a global hardware upgrade cycle. Agentic AI dictates a new 32 GB PC baseline, and flagship smartphones are already packed with 12 gigs or more, capturing 80% of the market. Expanding into the future, Level 4 autonomous vehicles will devour 300 gigs of DRAM, paving the way for a 20-year growth vector in humanoid robotics. To digest that massive workload, a global arms race is sweeping the planet. On U.S. soil, injected with $6.14 billion from the CHIPS Act, Micron is locking down its fortress with megafabs in Idaho and New York, targeting an insane 150,000 wafer start per month. Panning across Asia, while South Korea flexes 200,000 wafer megaprojects, the most lethal threat is roaring from mainland China, with 21 new fabs sprouting up. To crush this pursuit, Micron immediately pulled the trigger, acquiring PSMC's facility in Taiwan, detonating a massive new NAND project in Singapore, and aggressively expanding cleanrooms in Hiroshima. But remember, this massive war machine won't fully ignite until the 2027 to 2028 window. But make no mistake, this supercycle is a high-stakes game of roulette. The growth drivers are explosive. AI dominates over 50% of data center demand, and a massive $6.4 billion government injection is inflating CapEx budgets beyond $25 billion, engineering a permanent state of structural scarcity. However, the headwinds are absolutely brutal. Skyrocketing component costs now eat up 35% of a PC's BOM, risking severe demand destruction that could crash global shipments by 10.4%. A terrifying $108 billion depreciation trap is waiting if AI demand suddenly freezes. Even worse, the Trump administration just slammed a 25% tariff on high-bandwidth chips, while the Department of Government Efficiency threatens to restructure the entire physical defense hardware budget. Despite burning tens of billions on megafabs, Micron's true arrogance lies in its ruthless optimization philosophy. R&D winking and laughing spending is managed with militant discipline at a 12.1% CAGR, while SG&A is completely suffocated at 6.9%. Even as top-line revenues exploded by 196%, total operating expenses barely flinched, locked tight around the $1.4 billion mark, proving this is a hyper-efficient cash-printing machine regardless of its massive scale. This cold-blooded cost management instantly triggered a nonlinear profit leverage. Starting from the agonizing depths of a negative 63% mark, Micron's net income margin curve inflected violently upward, peaking at an apex 58%. Riding the massive revenue breakout, they squeezed out an unfathomable $13.8 billion in pure net income. This is the absolute testament to their pricing power in a market manipulated by structural scarcity. In the financial world, the Dominator is the one who perpetually shatters estimates. The actual reported revenue of $23.9 billion this quarter stood like a titan, completely blowing away the timid $20 billion consensus from the Wall Street elite. Riding this euphoria, projected pillars for the upcoming stretch rocket to $33.2 billion, $38.4 billion, and aim straight for a colossal $44 billion milestone by fiscal year 2027. Revenue is a promise, but EPS is cold, hard cash falling into shareholders' pockets. Actual earnings utterly flattened projections once again, surging to $12.20 versus the expected $9.20. The journey from the negative territory of 2023 has morphed into rocket propulsion, logging a blistering 759% year-over-year growth rate. This trajectory continues to shatter all limits, targeting an insane $25 mark. With a flawless cash machine like this, how is the financial elite pricing Micron? The consensus is absolutely overwhelming. Out of 50 analysts, 35 are screaming strong buy. Credit agencies like S&P wink with tongue sticking out. Global and Moody's have simultaneously upgraded their corporate ratings. Looking at the price trajectory, the average consensus sits at $532.28. But the real euphoria lies in the maximum price target of $1,000, projecting a massive 136% growth explosion for MU stock. Please note, the views expressed in this video reflect opinions at the time of publication and do not constitute investment advice. Hit like, subscribe, and drop your own price targets in the comments below.